Okay, for this particular one, we are going to be looking at risk, trade and risk management. Okay, and our major target on this is going to be based on stop loss and then take profit. So I will not dive into much things about trade. Now, based on stop loss, we know from our calculation of money management is the amount that we want to risk. But when we come to the chart, how do we place it? Maybe we have seen here as our what? As our value zone. If that is our value zone, then we place our this particular tool for measuring where we are going to enter the trade. All right. So our mode of entry is going to be that this is the point of entry, this is the high point, this is if you are trading, buying. If you want to buy this market, you place this your buy tools on the up point and then the down point. You draw it to the down point there so that you can have your signal. So you draw it from the point, from the top point of the zone and then to the down point of the zone. This is where you now place your stop loss. You just give it a little bit of space to make this trade to breathe, so that by the time the trade will come into your zone, all those pips and market fluctuations will not just take you out, so that this trade can still be active and then it will go to your direction if your trade plays out. All right, so that is for stop loss. Stop loss is just like the amount already calculated you want to risk. So this particular entry measurement tool will help us to determine that if our stop loss is in this place, is in this spot, and our entry is here, so meaning that everything between here, if we want to risk $10, by the time we play this trade on MT5 or MT4 on TradingView, if it is connected like that, everything we are going to be losing on this trade is just $10. But if it is $100, it's just $100 by using this tool. So how we are going to be placing it is just a little pictorial representation like this. You put your trade measurement to your entry measurement to put it at the point of at the first entrance of the zone, and then draw this red to the last entrance of the zone. So therefore, if this trade does not go to your direction, you are just going to lose $10. If you go to your direction, you are going to win the amount you want to win. So that is all about stop loss. Now let's look at take profit. So take profit, the point price we get before taking the money made. Okay, when price, using this particular analogy, price is making up and down movement, make another up movement, take out this high point, coming downward. We have already planned for this trade, so we want to know how much we want to make on this trade. At what point do we want to make a particular type of money? So that is the point of take profit. So we already know that by the time we place our trade like this, we know that, let's say we want to risk $10. So if the trade comes down, we are going to lose $10. But if the trade goes up, how much are we going to win with this our $10? That is all about take profit. So the recommended pattern of take profit we want to first of all look at is 1:1, meaning that we'll risk 1 to get 1. The other one is 1:2, you risk 1 to get 2. The other one is 1:3, you risk 1 to get 3, meaning that if we are risking $10 here, I want to go with the recommended profit target, meaning that we are going to be risking $10 to get $10. Okay, so but if we want to go with risk number 2, we are going to be risking $10 to get $20, which is 10 times 20, which is 10 times 2. So that is $20. And then if we want to be risking, if we want to go with number 3 pattern, we will now be risking $10, okay, to have $30, which is 10 times 3. I hope you get it now. It's just as simple as that. So among this recommended take profit, you can use whether you want to risk 1 to get 1, risk 2 to get 2, risk 3 to get 3, just like that. Okay, now what this means is that by the time you place your take profit, your profit, your trade measurement tool, this particular trade measurement tool, by the time you place it, you don't want to stress yourself about whether the price will go more than 1 to 3. For me, I prefer to use 1 to 3 risk to reward. That's my target. Okay, if my trade is in order, it meets my criteria, I usually like to go for 1:3. So by the time that this trade will get to here, it will give me 1:3. There are some trades after giving me 1:3, it will still continue to go up. For me, that is none of my business, in as much I'm good with the trade. But if I have more entry, I can enter it. But first thing first, I have to make sure I have achieved my 1 to 3. Then if it's going up, if it gives me another opportunity, I can take it. That is what I usually do. Now, let's look at the conservative aspect of it, of taking profit. What conservative aspect of it tells us is the recent or previous high or low point is going to be your major target when you are buying or you are selling. So in this scenario I'm using, it's all about buying market. Okay, so price is going up, come down, went up again, take out that previous high point. In this low point, it has given us a valid demand zone. What do? We place our buy tool there to help us to target the entrance and then the last point. If you are risking $10 here, we want price to get to this point and continue to go up. Okay, now where the difference between conservative and recommended is, in recommended, our after we have entered the trade, like I usually do, risk 1 to get 3. Before the price will get to the previous high point, if my 1 to 3 ratio is just around this place, I take it. But when you are being conservative with your take profit, you target the previous high point. You see it, which is the recent or previous high low point. That's where you target. In this scenario, as we are buying, you target the high point. So there are sometimes you see that the risk to reward ratio in this place is now 3.61. So that is where you target. You don't, sometimes it will give you more than that. Sometimes it will give you 5. It will give you 1 to 5. Sometimes 1 to 6, and so on and so forth. Okay, that is when you are being conservative. You just want to target your take profit is going to be the last or recent or previous high point or low point if you are selling. In this scenario, as you are buying, is the recent high point. That is where your target is going to be. Sometimes it will give you more than 3. Sometimes it will give you just 1:2. So you have to follow up with the one that you know that works best for you. All right. Now let's look at the aggressive one. At the aggressive point, to take profits, you are targeting the major high or low, especially if entry is in lower time frame. Thus, major time frame point is the main target. What this is this. Let's say this is our higher time frame. Okay, higher time frame. Let's say this is on the daily time frame, and then we'll come to the corresponding lower time frame on the 4-hour. Let's say this is the 4-hour time frame, and then on the 4-hour time frame, we have seen that there's a valid demand zone here. So we want price to come down on the 4-hour time frame, and it's not just come down like that. It will come down, make another high point, come down again. This is our target. This is our entry. Price has targeted into this trade. Now we are going to be taking this price to the high point. Okay, you can see that this is the high point of the daily, which is our time frame. This is the high point of the 4-hour time frame, this particular point here. I hope you see it. So instead of to target the 4-hour high point as being conservative, now when we are being aggressive with our target, we will not target the high point of the daily time frame, which is the higher time frame high point. That's where we target as we are buying this trade. If it's for selling, we are targeting the low point. I hope you understand. So all these things, you understand it more better as we go into our entry model in the next series of videos. I hope you get it. So that is being aggressive with our take profit, whereby we target the higher time frame point of reference, whereas when we are being conservative, we target the recent or previous high point. Okay, and then when we want to follow being recommended, the recommended profit target, we don't care what is the recent high or recent low point. We only want to enter our trade and target just what is recommended for us, which is, for me, I usually like to go for 1:3 if the trade meets all my criteria. That is how we take profit and set our stop loss. All right, thank you.